Welcome to MFX Center's 2-Minute Trading School, where 2 minutes a week can change your trading life. Before progressing further, let's look at the disclaimer. In this video, we'll be talking about the most important technical analysis tool, the tool that can help you to grow from wrecks to riches. So you might be thinking, what is the tool and can it help wipe out the bad trades from my account? Yes, it can, of course, and it will also protect your sinking account as well. So did you ever experience a moment when you took the trade and market reversed? I think you did. And I know how it feels. You felt irritated and thought that the market is watching your trades and wants you to lose, right? Now you don't need to worry. We have just the tool that will help you to understand the market better. The tool is called Confluence of Dynamic and Static Level. Now you might be thinking, what is that? I never heard of these things. I only use the static levels. So what is dynamic levels and all that? Mainly, the static levels are fixed levels drawn with horizontal or diagonal lines, and dynamic levels changes with price levels. That is like moving average and Ishimoku 5 lines. So in this chart, we see the trend line that is diagonal and horizontal levels, which are horizontal, of course. So how we can do the best use of horizontal levels and diagonal level? First, you need to zoom out and understand what the levels are. Level below the price is support and level above the price is called resistance. So for trend line and for the horizontal levels, you can get the support and resistance by drawing them accordingly. It is also quite true for the dynamic levels as well. But the main difference is that dynamic levels changes with price variation. Whenever the dynamic level is below the price line, it acts as a support, and when the dynamic level is above the price line, it acts as a resistance. In this chart, we see that the 200 exponential moving average and 20 exponential moving average has been working as a resistance to the price while the price was moving lower. So if we put everything together, we can see that the dynamic levels and the static levels can work together and as well as create great trading opportunities for the trader. And guess what? It is that easy to understand the market reaction. All you need to understand is how the market reacts to static and dynamic levels in the market. So as you understand and practice the technique, you can trade happily ever after. So don't forget to subscribe to MFX Center's YouTube channel. See you next week.